This is the only swing strategy video you'll ever need in 2026 to actually become profitable. Oftentimes, people share too many complex theories, complicated strategies that make trading so difficult to understand. And my goal today is to break all that and simplify it for you so you can actually use it, understand, and actually make money from the markets. So with that being said, let's go right into the video. So my simple strategy is actually the 1 hour swing breakout strategy. And the only reason I'm using this 1 hour swing breakout strategy is because it's extremely simple, it's very reliable, and I only need to trade 1 hour per day, which make it very, very sustainable. So this strategy has given me results like this, and this. And all these results are taken in live trades with my private Discord community, so you know that it's as transparent as it gets. And then I'm going to show you 4 simple steps that my strategy only requires. I'm going to show you real examples in live markets. So by the end of the video, you'll know exactly how to take the same setup and apply it into your strategy immediately. So before jumping right into the strategy, I just want to show you my live results so you can actually have a very realistic expectation when you apply this trading system. So we're only 2 weeks into January, and you can see I have generated around $34,000. All these results are actually the live trades that I've taken alongside with my live members. Everything is timestamped and nothing is done in hindsight. So my trading system has a win rate of a 50% and a profit factor of a 2. So I'm going to share with you the 4 simple steps of my breakout strategy. So step number 1 is actually to identify whether a stock is in an uptrend or a downtrend. So how we actually identify whether a stock is in an uptrend or a downtrend is simply by using the EMA 20. So for those who don't understand what the EMA 20 essentially is basically the exponential moving average over 20 days. So whenever a stock is actually above the EMA 20 for more than 3 days, we actually consider that stock to actually be bullish. And whenever a stock is below the EMA 20 for more than 3 days, we actually consider that to be bearish. I'm going to show you a few examples right here to determine whether a stock is actually bullish or bearish. So example number 1 is actually RKLB, Rocket Labs. So by simply looking at the chart, some people may actually find it to be very, very confusing on whether a stock is bullish or bearish. So you can see by simply applying the EMA 20 into the chart, we can see that the stock is actually trending above the EMA 20. So we know that if a stock is actually trading above the EMA 20 for more than 3 days, we know that the stock is actually bullish. So in this case, for Rocket Labs, we are only interested in taking long trades. And if we go to the next trade, it's actually Netflix. By simply looking at the chart, some people still may find it confusing. So you can see that after I apply the EMA 20, you can see that Netflix is actually trading below the EMA 20 for more than 3 days. So anything below the EMA 20 for more than 3 days, we actually consider this as a bearish stock. So for a bearish stock, we are only interested in taking sells or short positions because it will be more favorable for us to actually make money. And if I go to the next example, it's actually KKR. You can see that KKR is actually chopping around the EMA 20, is hovering around. So in this kind of stock, it's neither bullish or bearish. KKR is actually going sideways, or what we call consolidation. And in markets like this, we simply do not trade. Because remember guys, we are momentum traders. We want to trade when the stock has a momentum. It has a very clear direction of where the stock is actually going. And if we go to example 4, you can see that Palantir is actually trading above the EMA 20 for more than 3 days. And the reason I picked Palantir is also because a lot of my members actually asked the same question. Valen, the stock actually trade below the EMA 20. So do we actually consider this to be in a bearish or bullish momentum? You can see that there's only 2 days worth of candle that trade below the EMA 20, but we can only confirm that a trend actually changes if there's more than 3 days. So in this very case, we still consider Palantir to be in a bullish uptrend. So now we know how to identify an uptrend or a downtrend. The second step is actually to draw a valid trend line. So what actually considered to be a valid trend line? The first thing is that it must have a big base. So the trend line must cover as many candlesticks as possible. The second thing is that the trend line must be the least steep trend line to actually become a valid breakout, because the more steep the trend line is, the more fake out there is. And the third thing is that we want the trend line to cover everything, which includes all the bodies and the wicks. So I'm going to pull out one of the examples for this. How do you actually draw a trend line? So a lot of times people actually draw trend lines like this that pierce through all the different candlesticks. So trend lines like this is actually not as clear as we want it to be because there are a lot of fake outs, and sometimes it just gets very, very confusing. So instead, I'm going to show you exactly how would I draw a trend line. You can see I draw a trend line from point A to point B. So we know what actually considers to be a valid trend line, which is the first one, that this trend line must cover as many candlesticks as possible. In that case, it's actually true. And the second point is that this trend line must be the least steep possible. What steep actually means is that if I draw a really steep trend line, something like this, you can see that there are a lot of fake outs in this candlestick. So what we want to do instead is to draw a very nice and subtle trend line that is not as steep, because the steeper it is, the more fake outs you're going to get. So in this very case, this actually meets the criteria, which is the least steep trend line. And the third criteria is actually to cover all the wicks and the bodies. You can see that I only draw from wick to wick. So this actually becomes valid as well. So by drawing a valid trend line, you can see that when the price actually breaks the trend line, there's actually a very huge momentum to push the stock up. And then the huge momentum will actually allow us to actually make money from this trade. So I'm going to give you another example. So a lot of times people will draw trend lines like this and think that this is actually a breakout. But you can see if we take the trade right here, eventually we'll get stopped up right here. So the best way to actually avoid any fake outs is actually to draw a least steep trend line connecting from point A to point B. You can see that for point number one, that we need to cover as many candlesticks as possible. This one actually checks out. And the second point is that we want the trend line to be as least steep as possible, which actually is true as well. And the third point is that we don't want it to be piercing through any candlesticks or body, which is true as well. So you can see, upon breaking a valid trend line, the stock will actually continue to trend higher and eventually hit our take profit levels. So now that we know how to draw a valid trend line, the third step is actually to have our Confluence checklist. So what a Confluence checklist essentially is a combination of my trading view indicator as well as my Confluence calculator. So basically what this indicator essentially is that it is an indicator that summarizes all the different confluence that is required for a breakout to actually be true. And then you can see all the confluences from the indicator are actually exactly the same with the confluences in the calculator as well. So all you need to do is fill in all this different information into the calculator, and then the calculator will eventually give you a setup scoring. So the best part about our Confluence checklist is that even though we need market experience and market sentiment to come into play when it comes to trading, but the Confluence checklist actually gives you a mechanical approach. It gives you an objective view of whether a setup is actually good or actually bad. So for those of you who are actually interested in the TradingView indicator, all you need to do is go to TradingView and type in Valid Momentum Indicator. So the indicator is absolutely free. Everyone can actually type in Valid Momentum Indicator and get it from TradingView. As for the Confluence calculator, this is actually only for my private Discord members to actually use it. But you don't actually need the Confluence calculator to actually trade. The momentum indicator is actually good enough for you to understand whether a setup is actually good or bad. So with that being said, I'm going to go through with you each of these different confluences. I'm going to explain to you what is the purpose of it as well. So first of all, we're going to talk about the relative strength. As I've told you guys before, we are actually momentum breakout traders. So we want to trade stocks that have extreme momentum that's pushing to the upside. So what this indicator actually does is that it takes the stock strength that you're actually trading and compare it to the market, so the S&P 500. So you can see if I use NVIDIA as a case study, it actually only has a medium relative strength. So ideally, if you want to long a stock, you want it to be extremely strong, that is much stronger than market. So if the market actually goes up, this stock will actually push even higher. And if you want to take a short position in a stock, you're looking for a stock that has weak relative strength. Because if the market actually pulls back a little bit, that weak relative stock will actually plunge all the way down. So by actually taking relative strength into consideration, we're actually putting ourselves in a much favorable position. So for the next confluence is actually RVOL. What RVOL essentially means is relative volume. And how relative volume is actually calculated is that it takes the breakout candle, which is this one right here, and it compare it to the 50 days average volume. What that means is that you want this breakout candle to have a lot of volume behind it. Because what a lot of volume essentially means is that there's a lot of participation from the market. There are either institutional buyers or there are a lot of retail demand. So as momentum traders, we want to ride along with the big boys so that it actually has momentum to push the stock all the way up. So by looking at NVIDIA, you can see that the relative volume is actually 1.98 times, which is actually minimal. Because at minimum, we want the relative volume to be bigger than 2. Because what this simply means is that the relative volume is twice as much as the 50 days volume average. And obviously, if you're looking to buy a stock, you want the relative volume to be as big as possible. Ideally, it's above 3, 4, or even 5. The bigger the number simply means that there's a lot of demand and a lot of participation from the market. So the third confluence is actually volume contraction. So what volume contraction essentially means is that there is a decrease in volume prior to the breakout and a tightening price. So upon breaking out, we will know that a stock has a lot of momentum. So the fourth confluence is actually the rubber band effect. So basically, we're using the EMA 20 as an anchor. So the EMA 20 serves as a benchmark. So you can see whenever a stock actually trades very far away from the EMA 20, there's actually a very high tendency for it to pull back towards the EMA 20. There are different names for this. Some people, they call it mean reversion, which means that the price have a tendency to trade back towards its mean average price. But I like to use the rubber band effect because rubber band makes a lot of sense. What goes up must come back down. So the purpose of this confluence is that imagine you want to take a buy position right here, but you already notice that the price is pretty extended from the EMA 20. So the probability of the stock actually pulling back down is actually much higher for it to trade up. So this confluence actually show you whether the price that is currently trading, is it normal or is it extended? So by just simply looking at one glance on this indicator, you will know whether a stock is extended or is it a very reasonable price that you can take a long position. So after we draw a valid trend line and we want the stock to actually break out from that trend line, you want the candlestick to be the most bullish candlestick. So for that specific breakout candle, we want to check what is the body to wick ratio. I've put out a visual representation of the least bullish candlestick all the way up to the most bullish candlestick. So we are simply just looking at price action. So we want the body to be as big as possible. You can see in this case, the body is only 25% of the entire candlestick. And the second case is the body is 50% of the entire candlestick, so on and so forth for 75% and 100%. So ideally, we want the breakout candle to be 100% body. So you can see that the momentum indicator essentially helps you to measure what is the breakout candle's quality. Is it a very high body to wick ratio, or is it just a very weak breakout candle? As for the last confluence right here, ATR, which actually means the average true range, we only use this value to set stop loss. So now that we understand how do you actually use the momentum indicator, all we then need to do is fill everything into the calculator and it will give us a setup score. You can see for the setup score, I'm only interested in taking trades that fall in the A+, A-, B+, or B- zone. Anything that is below the B- like a C setup or a skip, I will simply not take the trade. This way, I'll actually have a very mechanical approach to each setup and actually have a very objective assessment of whether a stock is actually a good trade. So now that we understand the 3-step process, I'm going to go through 10 different trades to let you see how this strategy can be applied in real trading scenario. And I want to put something extremely clear that I did not cherry pick all these 10 different trades. These 10 trades right here are all called out live on my Discord and my Instagram with my members, so you know that everything is done transparently and nothing is done hindsight. So I'm actually in TradingView right now. I'm going to show you real examples on how can you actually carry out this strategy and use it in live markets. So first of all, I actually already have my indicator pulled up, but for those of you who haven't done that, all you need to do is go to the indicator section and simply type in Valen. You'll see Valen Momentum Indicator. Once you click on that, the panel will pop right up here. And secondly, I just want to put it out there that we only trade the 1 hour time frame because I find the 1 hour time frame to be a balance that respects all the higher time frame levels while still have a lot of momentum. Whereas anything below the 1 hour time frame, there's actually too much noise. So you guys can see that right now we're actually in the stock Kava. So what we need to do, step number 1, is actually to identify the trend. So you can see that ever since the 1st of December right here, Kava has been trading above the EMA 20 for at least more than 3 days. So what that simply means is that Kava is actually in a bullish uptrend. So in a bullish stock, we only want to take long positions. Step number 2, we want to draw a valid trend line. So the definition of a valid trend line, I put it up right here, is to cover as many candlesticks as possible, is to be the least steep, and to cover both the body and the wicks. So if I draw a trend line like this, you can see that I only cover candlesticks from this point to this point, which is a 5 days worth of candle. The trend line is a 30-degree, which is kind of steep as well. And the last point that it covers both the body and the wick, that checks out. But a better way to draw a trend line is actually to draw it from here all the way to here. You can see the new trend line is actually least steeper than this one. It actually covers more candlesticks as well. From this to this, it covers 13 days worth of candle. And the third point is that it covers both the body and the wicks. So we know that this new trend line is a more valid trend line than the previous one. So all we need to do right now is actually just to wait for the candles to break out from this trend line, and then we can assess whether is it a valid breakout. So you can see price actually did break out from our trend line. So right now, all we need to do is actually go to the Confluence checklist and see whether this is a valid breakout. So by just keying all these different confluences from my momentum indicator and put it into the confluence calculator, you can see that this is actually a good setup because we want to take setups that are A plus, A minus, B plus, and B minus. So Kava fit into that range. So since this is a valid setup, we're going to take this trade right here. And all we need to do right now is just to set our take profit levels and our stop loss. So there are actually two ways that you can set your stop loss method. So you can see the intersection point between the candlestick and the trend line is actually 55.4. So if you take 55.4 minus the ATR, that will actually give you your stop loss level. And the reason we're using ATR is because ATR is the average true range. It means that how much the stock actually moved in a 2-week period. So average true range is one of the methods that you can use to set your stop loss. Another method of setting a stop loss is actually to put your stop loss levels below the breakout candle. If you need more information on how do you actually set stop loss levels, I've made a video entirely on about entries and exits that I'm going to put a link down in the description box below. You can click into that video for free after you finish this one, so you know exactly how do I set stop loss levels. So in this very case, we're going to risk $10,000 in order to make $20,000, and let's see how Kava plays out. So you can see that in a matter of 6 days, we managed to make $20,000 for Kava alone just by using this simple breakout strategy. And we know that the breakout is actually valid because we have put a mechanical setup and an assessment onto Kava, and we know that this setup is actually valid. So the second example I'm going to go to is actually Meta. You can see right here. And we're going to go through the same 3-step process and to see whether this trade will actually play out. So we can see that Meta is actually trading above the EMA 20. At one glance, we know that this is actually a bullish stock. And in this case, we're going to go to the second step, which is draw a valid trend line. The best way to actually draw a trend line is actually this, because it covers all the body in the wicks, it covers as many candles as possible, and it's actually the least steep trend line. So right now, all we got to do is actually wait for the stock to actually break out from the trend line. So after breaking out from that trend line, all we got to do next is actually to plug in all the different confluences into our confluence calculator. You can see that Meta is actually a pretty good setup. We get a B plus setup for Meta. So we're going to take this trade and we're going to see what actually happens. So you can see for around 2 weeks or so, Meta eventually hits our stop loss level. And the reason I'm showing you this is also because I want you to have a very realistic expectation. In trading, it always comes down to probability. And we as traders, our job is actually to take trades that has a valid setup and we let the trade play out by its own. So coming to the third example, we're actually in Applovin. So step number 1, we can look at Applovin is actually above the EMA 20. So this is a bullish momentum stock. So we did draw a valid trend line, and all we need to do right now is wait for a breakout and put everything in the confluence calculator. So price actually did break out from the trend line and we put all the confluences into the confluence calculator, and this setup actually came back as a B plus setup. So we're still going to be risking $10,000 in order to make $20,000, and let's see how this plays out. So we can see that even though it went to the green for a little bit, eventually we did not hit take profit and it stopped us out right here, causing us to lose $20,000. So for the fourth example, we're actually in ALB, and for ALB, we can see step number 1, we can identify that ALB is actually in an uptrend because it's trading above the EMA 20 for more than 3 days. So step number 2, we want to draw a valid trend line. All we need to do right now is just wait for price to actually break out. You can see that after price did break out from our trend line, all we need to do right now is to put everything into the confluence calculator and to see what grade ALB actually has. So ALB eventually came back as a B minus setup, so we want to take this trade. So right now we're risking $10,000 in order to make $20,000, and let's see how it plays out. So you can see in a matter of 5 days, we managed to close out ALB for a $20,000 profit. So moving on to the next example, we're actually in CDE. And right now we can see just from one glance, we know that CDE is actually above the EMA 20, which means that it's in a bullish uptrend. All we gotta do is actually to draw a valid trend line. Step number 3 is just to wait for the trend line to be broken out, and we can put all the different confluences into the confluence calculator. So you can see that CDE came back as a B minus setup, so we want to risk $10,000 in order to make $20,000, and let's see how that plays out. So you can see that CDE eventually came back as a winner, so we made $20,000 from this trade. So moving on to the sixth example, we're actually in Lam Research, LRCX. So step number 1, LRCX is actually in a bullish uptrend. We know that because it's above the EMA 20 for more than 3 days. So step number 2, we actually want to draw a valid downtrend line. After the price actually broken out from our trend line, and LRCX eventually came back as a B minus. So I'm risking $10,000 in order to make $20,000, and let's see how it plays out for Lam Research. So in a matter of 4 days, we managed to close this out as a winner and make $20,000 from this trade alone. So moving on to the seventh example, we're actually in Palantir. So you can see that Palantir is actually above the EMA 20. So we know that this is actually in an uptrend. Step number 2, we want to draw a valid downtrend line right here. And all we need to do right now is to wait for the price to break out. So Palantir came back as a B minus setup, as you can see right here. So we want to risk $10,000 in order to make $20,000. And let's see how it plays out. So in the span of 10 days, Palantir came back as a loser. So we lost $10,000 in this trade. So the next example we're going to go through is actually AMTM. You can see that AMTM has been above the EMA 20 for more than 3 days. So we know it's an uptrend. Step number 2, we just want to draw a downtrend line that covers the most candlesticks possible. So you can see that after AMTM actually breaks out, the stock actually came back as a A minus setup. So this is one of those cases where there's actually a very, very high possibility that the trade is actually going to play out because it's an A minus setup. And let's see how it plays out. So for around 2 weeks or so, AMTM eventually came back as a winner and we managed to make $20,000 from this trade. So for the ninth example, we're going to talk about is HL. So in HL, we can see that it's in a bullish uptrend because it's above the EMA 20 for more than 3 days. So we're only interested in longs. So step number 2, same thing, we're going to draw a downtrend line right here and wait for price to actually break out. So after the stock actually broken out, we can see that this is actually a B minus setup. So we want to risk $10,000 for this trade in order to make $20,000. So for HL, it's very, very interesting because you can see that price eventually wigged us out right here on the 2nd of January and then eventually spiked all the way up and hit our take profit levels. In this case, we still consider this trade as a loss because this stop loss right here would have taken us out. Even though it sucks to be stop out like this and eventually went to our favor, but this is just part of the game. So I want to be as transparent as possible to you guys, and this will often happens as well. So our job is not to get upset about it, but to move on to the next trade and still willing to take the same risk. Because at the end of the day, it's all about probabilities. So coming to the last example, which is VSCO, Victoria's Secret, we can see that Victoria's Secret is actually above the EMA 20 for more than 3 days. Step number 2, all we got to do right now is actually just to draw a downtrend line right here and wait for the price to actually break out. Our Confluence calculator actually came back as an A minus setup. So an A setup essentially means this has a very high probability of actually playing out. And let's see how it plays out. And just like that, you can see we managed to make $20,000 from Victoria's Secret just from using this breakout strategy. So now that we have gone through the 10 different trades, this is actually the result. You can see that even though we did get stopped out from Meta, APP, Palantir, and even HL stopped us out prematurely and eventually went to our take profit, it doesn't really matter because what really matters eventually is the risk management. You always want to cut your losers fast and let your winners run. And simply by applying good risk management and the tool risk to reward, you can see that we have a win rate percentage of a 60%, we have a winning R multiple of 12R, and we have a losing multiple of 4R. That gives us a net 8R. And eventually, we managed to make $80,000 from these 10 trades. So before I end the video, I want to talk about the last step that I need you all to know because this is the most important step of all. So the last step is actually consistency. I need you to stick to one strategy and one strategy only for the entirety of 2026. Because all you need is one simple strategy because 99% of the traders, they don't lose because of their strategy. They lose because they have their inconsistency and switching from one strategy to the other. Sticking to one strategy and refining it to the very T will eventually make you a profitable trader. With that being said, I hope you enjoyed the video. My goal is to be as transparent as possible and to simplify everything and break down everything to be very, very simple for you to understand. So if you like this kind of video, remember to subscribe to the channel, like the video, and I'll see you guys in the next one. Peace, guys.